How's it going, everyone? It's Ben and Troy here from the Intraday Investors YouTube channel, and today we're going to talk about trading losses, specifically on two trades that Troy took a couple weeks ago on Adobe.
There are three trades.
Three trades? All right. Three trades on Adobe and NVIDIA that he took a couple weeks ago. And we're going to start off with a quote of the day from Steve Burns. He's actually a really successful trader, and he's on Instagram. You guys give him a follow. That's Joseph Burns. So the quote of the day, is you have to accept losses and drawdowns as a part of the process. So in trading, you can kind of treat it like a business. For me personally, my trading account, I treat it like a business because some days I'll take losses, and that's just a part of the process. Like we were talking about, as a business, you hire employees, you have different expenses, and those come with a price. And the same thing comes with trading. Not every day is going to be a green day, and that's what we got to take away from this. So it's going to be a part of the process.
Awesome. So this next picture we have, this is basically every novice, every beginner trader. The top picture is what everyone's ideal outlook is, to their ultimate
straight
goal.
line up to success.
Yeah, and that's really not how it is, and that's just with everything in life, not just trading. Everything. It's not a straight up road hill, or else everyone would be successful and everyone would be driving around, being, living that lifestyle freedom. But the bottom is,
the reality.
Yeah. So this is the picture Ben wanted to show you guys. Yeah. But yeah, the bottom's reality. And
it's actually a pretty funny picture, as you can see, but it's very realistic. Everybody goes through down draws, drawdowns, and bad times, and that's exactly what can happen with trading. Sometimes you're going to go through a losing streak. You might have a couple of days where you lose, maybe even a month. But the important part is that you get back to your plan and your strategy, and you keep with it, because the road to success isn't a straight line. And
obviously this isn't the prettiest picture, because as you can see right here, if this was really how your account went, that's a big loss right there. And we manage our losses, all right? We're really conservative. We manage our risk, and we make sure the reward is much greater than the risk. And that's what really separates a lot of the traders.
Exactly.
So we're going to start out with Ben's trade recap on trading and losses. So this isn't a rate cap. You're just going to be talking about your losses in trading.
Yeah, so I wrote this down. Losses can come from traders being too emotional, but it can also come from taking a good setup and it just not working out. When we're in a trade, we get stopped out. That should be the end of it. We should have our stop loss. We should take the loss, and that's it. We should get out. But if you decide to remove that stop for any reason, or you hold on to your losses through the stop, you're too emotionally attached to the stock, and that's not a good mentality to be in when we're in a losing trade at all. Because a lot of the times, I'm even a victim of this myself. I'll get into a trade, it'll go against me, but I'll say, oh, okay, it can go back up, and then my loss just gets greater and greater and greater. Next thing you know, you're in a $200 hole.
So that's because you're using a mental stop loss.
Yep, exactly.
So the difference between a mental stop loss and an actual order type is, an actual order type automatically, your computer automatically sells your position, cut your losses at a certain risk tolerance or a certain percentage loss, and then you move on to another opportunity. You were hoping, you were coming up with some rationalization or some reasoning to why this is a good trade or why you should hold this, and you're ultimately bag holding it. And you're coming up with this reasoning or you're trying to rationalize with yourself to hold the stock, and you ended up,
a bigger loss.
Yeah. So
it's important that when we're in a trade, we have a hard stop and we're not taking it too emotionally serious, because that's what's going to lose to a larger loss than we expect.
So we're going to go over my trade with, it was Facebook.
Facebook.
Okay, so I had three trades, like I said. This was December 13th, so this was about a month ago. Yeah. Month ago. And so we're going to be talking about my trade with Adobe, NVIDIA, and Facebook. So I'm going to start off with Adobe. So I had a good entry. You can see after market hours, it pushed up after market hours, and it held that price point. It didn't sell off. It stayed up in that margin, okay, and it consolidated all the way through to a pre-market. It
bounced twice.
Yeah, it bounced twice, and it held that support from aftermarket hours. Okay, so I did buy. I had the right idea. It broke above that level. I had the right idea, but sometimes the trades just goes against you, and that's part of trading. You know what I
Exactly,
mean?
yep.
That ever happened to you where
Mhm.
like you had the right setup, you had the right idea, and you executed, but it just didn't it just naturally didn't work out.
Yeah. You executed on a good plan that you developed during the pre-market based off prior support levels, and you took the trade, but it didn't work out. And a lot of times in trading, that's something that can happen. On a stock specifically like Adobe, where it's very very expensive and it has some volatile moves, it's easy to stop out on a trade like this. So it's good that you limited your risk to only $50. It's important that you had that hard stop and that you stopped out where you knew that your risk tolerance was
Right.
going to be. That's important because, like we saying, if you have a mental stop, maybe it comes down below that pre-market level, and you're going to continue to hold
Right.
until you end up having a huge loss.
So yeah, so I recovered some, but you know what?
Good trade either way, just to stop out. It happens.
All right, so we'll talk about my next trade, NVIDIA. All right, so my second trade with NVIDIA was actually a chaser. So I entered at one contract 101 and sold at 73. I had a 30 cent stop loss, which is I don't know. I chased the stock a lot. I can tell. I'm looking back at it, and you can see this 5 minute candle pushing up, all that momentum, and I bought at the peak of it, hoping for it to break because it did break that pre market level. You see that pre market resistance right here? It broke that pre market resistance. So I did have the right idea. I could have bought
A little early.
a little early. It looks like, but I mean, that was a chaser, and I got burned. Okay, but ultimately, what the message we're trying to get here, which is really good, I was down like what $78 that day, so I walked away. So this is my Facebook trade, and I didn't profit that much. I mean, I only took a small position, 2 contracts at 42 cents. But the ultimate, I did walk away. So I remember this day. You remember this day when we were trading? So I was feeling it after I lost those 2 priors. I mean, it's all right. It's part of life. You lose, but what I did is I walked around my block, okay, and I came back and I felt refreshed and I was focused, and that's what caused me to win this trade. If I would have just kept staring at my screens after these 2 losses, I most likely would have lost again. You know what I mean? But yeah, do you ever find that effective where you just walk away, regain your focus, and then when you come back to the screens, you're refreshed?
Mm-hmm. Even if it's just to go get some water, just to take your eye off the screen. When you're in trades and you're losing, you can get really emotionally frustrated. You can start trading on tilt, and that can end up going to bigger losses. You can start taking bad trades, just revenge trading.
Mm-hmm.
So losses lead to a lot of different things. So you have to be really diligent with yourself, and you have to understand that maybe if I'm in a few losses, it's time to walk away. It's time to be disciplined. It's time to turn off those computer monitors, and that's exactly what you did. And then you came back refreshed, and you were able to put on a good trade because you were in a better mental state.
Yep, exactly. And also, like, I had small losses. I mean, this was a little bit bigger. I mean, but that's part of it. But ultimately, they weren't it wasn't $100.
Exactly. So what we can take away from these is that your losses were small.
Mm-hmm.
Okay, they weren't $100, $200 losses. You were minimizing your risk on good setups, which is good.
Right.
Because even if you think about this, like, these are good trades. But what we were talking about earlier, there are trades where you can have a 5-to-1 risk to reward. So small losses like this, it's okay if you take them because you might have a big trade where you make 5, 10-to-1, and then you're up because you took small losses instead of having $200
That's
losses.
The importance of cutting your losses early. So back to my third trade, I was feeling it after my 2 losses, prior. So I went for a walk around the block, came back, and felt refreshed. And that's the ultimate goal here. And that's what caused me to win the trade. There was a great entry. It broke below the support. The SPY was dumping, and I shorted the stock. And I maybe could have bought more contracts since they were so cheap. And I did have laser focus. I actually do remember this trade. But you know what? It was a small position, and I profited, and I made back some of my losses. And not only did I lose and make back some of my money, so it was a total profit loss. So I lost 58 before fees, 66 after fees. Ultimately, I was able to learn something from it. You know what I mean? I was able to learn that when I walk away from a screen and I'm not like congested and just staring at the screens all day and I'm refreshed, that's when I find my most success when I trade later in the day. And I learned about that you could have a great setup and it could still go against you.
Yeah, exactly. So it's important that we keep our losses small.
And our losses small.
Yeah, exactly. So when we keep our losses small and a good trade comes around, we can really maximize profits on that. Because we didn't have $100, $200 losses,
right?
That's really going to draw down our account.
Mm-hmm. For sure. So yeah. So I mean,
we went over the 3 trades that Troy took. We gave a quote of the day. I really hope you guys learned something from this. Trading losses, it's a part of the game.
Yeah.
It happens to all traders, and it's really important that if you're a beginning trader, you have to understand that trading losses is just a part of the game, and you have to go through that if you want to be a successful trader.
And you can't like be discouraged. So when a trade does go against you, because we do have, for example, one of our buddies that took a position and he lost a lot more than he thought he was, but he's more of a novice trader, and he felt really discouraged and he wanted to give up. I think it was like $1,000. I mean, that's a lot of money, but
it's important though that we learn from mistakes like that, and we
just
can only grow and get better.
yeah. So
you got to understand that trading losses, it's not as big of a deal because it's just part of the road to success.
Exactly, just like that picture we showed you in the beginning.
Exactly.
So we're gonna wrap it up here. I hope you guys got something out of this. Like, comment, and subscribe. Have a good one, guys.
Getting to the money, everybody mad.